Good morning. Thank you for joining us. We will begin shortly. We're just doing a sound check for the interpreters. We will begin at 11 a.m. Okay.
Okay?
Yes.
Perfect. Good morning, everyone, and thank you for being with us today. I want to give a very special welcome to our guest, Kristalina Georgieva, Managing Director of the International Monetary Fund. Thank you so much for your time today. I am very much looking forward to our conversation. I also want to welcome our Americas Society Council of the Americas members watching on our WebEx and our audience from all around the world watching us live. I want to remind our audience that the program is in English, but we will have translation to Spanish and Portuguese available for WebEx guests and the press. If you haven't already, please call the number written on the chat. Of course, the managing director needs no introduction, but I would like to say a few words about her career. Before joining the fund, she was the CEO of the World Bank from January 2017 to September 2019, during which time she served as interim president of the World Bank Group for 3 months. Previously, she helped shape the agenda of the European Union while serving as European Commission Vice President for Budget and Human Resources. She began her career in public service at the World Bank as an environmental economist in 1993. After serving for 17 years in many senior positions, her career culminated in her appointment as Vice President and Corporate Secretary in 2008. In this role, she served as the interlocuteur between the World Bank senior management, its boards of directors, and shareholder countries. She serves on many international panels, including as co-chair of the Global Commission on Adaptation and as co-chair of the United Nations Secretary General's high-level panel on humanitarian financing. And some numbers for us to quantify her achievements and responsibilities. She was the first woman CEO of the World Bank. She is the first managing director from an Eastern European country, Bulgaria, and from an emerging market. She is the second woman to become managing director of the IMF. She oversees $1 trillion, the amount the IMF is able to lend to member countries. And she oversees 2,700 staff from more than 140 countries. More importantly, the managing director is a role model for so many young women around the world. It's an honor to engage in this dialogue, Madam Managing Director, with you today. So let's begin. It would be so interesting for us if you could tell us a little bit about how you're seeing the impact of COVID-19 on the economies of Latin America and how you see 2020.
Well, thank you very much for this very kind introduction and for giving me a chance to engage with the Council of the Americas and a broader audience. This is a crisis like no other. It has hit the whole world, the first truly global crisis we are experiencing, and it has created tremendous suffering because it is a combination of a health crisis and an economic crisis the health crisis induced. Unfortunately, for Latin America, the region is particularly hard hit. And let me just go through the numbers and then the reasons why these numbers. In terms of the pandemic itself, as many know, Latin America has 8% of the global population, but sadly, 20% of infections, 30% of deaths. Life lost are exceeding 460,000. And we are not yet seeing the end of the pandemic. The other side of the crisis, the economic side, not surprisingly, given the health hit is also quite dramatic. We are projecting for 2020 the world economy to shrink by 4.4%, emerging markets by 3.3%, Latin America by 8%. Let's see where we come at the end of the year, but these are staggering numbers. And even more troubling is that when we look forward in 2021, we project the world to grow by 5.2%, emerging markets by 6%, Latin America by 3.6%. So these numbers tell a story that it is more severely hit and it would have harder time to come out of the crisis. And the question is, why? There are, of course, different answers for different countries and categories of countries, but what is common across Latin America is three overwhelming reasons. The first one is that the region has been growing somewhat slower in years before. In the 90s, Latin America had income per capita at 25% of the US. Emerging Asia had 5%. So Latin America was many times better. Today, emerging Asia is coming to almost 20%. Latin America is still at 25%. So somehow this momentum of growth has not materialized. And we can talk later about what can be done about it. Second, so many of the workers in Latin America are in contact-dependent industries, actually 45% versus 30% globally. And if you think of the fate of the island economies, the Caribbean, they were just so hammered by the pandemic, where income depends on tourism between 50 and 90%. So this contact dependency, of course, played a role. And three, sadly, what we have seen is that underinvestment in people makes the situation tougher. The fact that health systems have been overwhelmed, that tells us that we have to do better in the future. Now, I want to give credit where credit is due in Latin America, and it has been the decisiveness for policy action to protect economies from even worse outcome. Latin American governments have deployed monetary policy measures, central banks have cut interest rates, and finance authorities have put in place the equivalent of 8% of GDP in measures of which 4.5% of GDP are very direct measures like boosting expenditures or reducing tax collection, reducing revenues. What we are also seeing in Latin America is that there is a recognition that the crisis is an opportunity. We can do better for the future. And I very much welcome this dynamic thinking in the region. What can be done so we can come on the other side in better shape than we entered the crisis?
So you talked a little bit about about the slower growth, but clearly there are structural and policy reasons why Latin American countries have experienced COVID differently, but also why they haven't grown. I mean, your comparison of Asia, that's structural, no?
Mm-hmm. Yep.
And what are some of those reasons?
Well, let me first say that Latin America is a very diverse region. So one size policy description doesn't fit all countries. But what we have seen in Latin America over the last decades is indeed a less of a concentration on productivity, on the most important asset for growth in the future, and it is human capital. Educational attainments could be better. Conditions for private sector growth could be better. There is still quite a lot that can be done to eliminate obstacles for private sector-led growth, for dynamism, and something that is kind of a glass half full, half empty, the problems of inequality. Latin America has improved. So let's say that it is better than it used to be, but it is still the most unequal region. Why does that matter? Of course, it matters from an equality standpoint, but it also matters from a growth standpoint. Inequality of opportunity means that part of society is just not reaching its full potential. That is bad for people. It is bad for the economy as a whole. And what is particularly important to rethink today is how could that be changed? What can be done? So we are addressing these structural impediments to growth. And finally, something that I'm sure you have been discussed many times, integration in the region. At the level of the region, at the level of sub-regions, there is so much more that can be done to benefit growth just by building stronger links between economies that can perform at a higher level on that basis. If you look at my country, Bulgaria, in Eastern Europe, what is the biggest boost for Bulgaria? Big part of the European Union. So you have 420 million still, with UK still part of it. You have a large economy that offers so many more opportunities, goods travel, people travel, opportunities are grabbed in a more effective way. And that is particularly important for the young people of Latin America. It's a youthful region. It can do so much better by tapping in the talent of entrepreneurship. We saw, and I would finish with this because this is probably the one silver lining on our COVID cloud. We saw the winner of this crisis, digital. The digital transformation made it so clear that those that are high-skilled can do well. Those that are low-skilled, that are excluded from the digital economy, they suffer. And if you look at labor market outcomes today, they are telling us that we have to be very watchful for what is the shape of the recovery. Why? Because labor market outcomes demonstrate high-skilled here, low-skilled workers, women, young people, very negatively impacted. So we will have all kinds of letters in this recovery soup. But one letter to be watchful of, especially in a region with deep roots of inequality, is a K-shaped recovery. One part of the economy recovers, does wonderfully, and another part stagnates and falls further behind. And that is only fixable with structural policies, with structural reforms.
And as we were talking before, education is one of the most important areas because that accentuates the people or the young people that don't have the skills and don't have the resources to be able to improve their way in life. No?
Yeah, I mean, of course, you have the issue of skills. You want more investment in human capital. You have the issue of entrepreneurship. Not only access to digital, but financial inclusion, ability for entrepreneurs to step up. men and to women. And you have the issue of eliminating barriers for integration. You attack these three obstacles, you come on the other side better. And boy, do we need it with the climate crisis hanging over our heads.
Absolutely. So could you talked a little bit about integration. There's a real opportunity because since we last spoke with the IMF, there have been US elections. And so do you see that there is an opportunity for the US and Latin American countries to really have more economic cooperation and therefore be able to help Latin America with their recovery?
Certainly, the US economy is very important for Latin America. 45% of exports from Latin America go to the United States. 40% of investments in Latin America come from the United States. And especially for countries that depend on remittances, the role of a well-performing US economy is really great news. So what we see is a fairly ambitious plan for the recovery in the US. One, tackling the pandemic, which is the biggest obstacle to recovery. This is number one policy priority everywhere. Two, focusing on a stimulus, especially one that can create better infrastructure for growth. And three, a commitment to climate action, which means jobs in the green economy and boosting growth through this policy actions. And then a special attention to Central America. Already a $4 billion plan is being announced to help Central America address poverty, do better for people there. So if we are to see the US economy coming out of the pandemic with more employment and growth, that is good for Latin America. Also, what is good for Latin America is a recognition that global value chains have to be more diverse. And of course, proximity of Latin America to the US helps Latin America's case. And for a region where big chunk is at high risk of climate change, a renewed commitment to climate action. All those are going to be helpful policy directions.
People talk about nearshoring. Do you see that as a huge opportunity for Latin America?
That would be some of it, yes. And this is why I'm saying that proximity works for Latin America in that regard. How much and in which sectors is to be seen, because we also have to recognize that digitalization leads to exact opposite. Work can be done anywhere at any time. When you take the service part that is within the digital economy. But that means that Latin America has to walk on two legs. One is make yourself more attractive by creating better conditions for entrepreneurship and investment, more qualified labor that can be tapped into on one side, and on the other side, make sure that the region becomes more digital. So nearshoring, being in the same time zone in the digital world, can also be an advantage for Latin America.
So you've touched on this, but one of the things that concerns me so much is how we prevent another lost decade in Latin America. I lived through the lost decade of the 80s and the 90s. So what's your perspective on that?
It need not happen. It is So I will give you my more optimistic view of the world. And with full disclosure, when you run an organization that is a first responder in crisis, when crisis is pretty much what you zero on, you have to be optimistic. What I want to start from is the global financial crisis. So it hit very severely, primarily advanced economies, but as a result of this crisis, everywhere in advanced economies, in emerging markets, even in big parts of the low-income countries, there has been resilience built in the banking system. So the financial system today is much stronger. The question for all of us, and for Latin America in particular, is will the region embrace building resilience so it can withstand shocks to come? And shocks will come. In other words, will this sober moment, a tragedy that affects virtually all of us, translate into investing in resilience of people, education, health, social protection? By the way, the region has done quite a lot on social protection, and that should be recognized. Resilient planet. So much of Latin America depends on improvements in land management, coastal zone management, taking advantage of the richness of nature for well-being and actually also for growth for the future. And more resilient economies where buffers are being built, fiscal buffers are built, macro foundation of the economy is strong. Will this be done? And if it is done, if there is a push for greener, digital, and more inclusive future for the region, where problems of governance are also sorted out, problems of kind of taking care of different interest groups from a political perspective of the short-term, not the long-term growth perspective, that can be a great outcome. I lived, and I would finish with this because there is nothing like personal experience to make you believe in your opportunities. I lived through times when my own country was on the verge of collapse. We had hyperinflation, unproductive sectors of the economy, a population losing hope in itself, in its future, mid-90s. And then building fundamentals, opening up space for a private sector, integrating in the European Union, made Bulgaria much, much better off, 4 times better off to be exact. Still problems to be solved, and mostly problems on the government side, rule of law in that area. But a crisis, if a crisis is to serve the future, it should be to shake us up, and what we thought was impossible to become possible and then done.
I share your optimism. I hope that we can all take amazing learnings from this experience and turn it into much more aggressive global growth. You touched on something which I think is really important, which is informality. And one of the reasons that Latin America, I think, has been hit so hard is there's such a high level of informality and inequality. Informality helps create informality, and so what's your view on that? I mean, how do we impact the informal economy and bring people into the mainstream?
Well, the answer is not easy. If it was easy, it would have been done everywhere. But if you look at countries that have been more successful in integrating the informal economy into the formal economy, they share three common features. One, they put in place strong institutions that are trusted, in many cases on e-platforms. E-governments have the advantage that the public can see how is money collected from whom, how is money spent. Secondly, they have a tax system that is fair, more progressive. So if you're doing very well, you share this with those down, which allows the third component, which is to create opportunities for everyone and then turn these opportunities into integration in the formal economy. You have to collect taxes. One of the reasons people stay out of the formal economy is to avoid paying taxes. Well, there has to be strong system of including everybody for good and for bad. So when you need help, you can be helped through strong social safety nets. And that is actually, sorry, I should have said that in the very beginning. Strong, vibrant social safety nets also help with informality. The more countries think of a vibrant, inclusive economy being their future and able to counter pressures from vested interests, the faster this transformation can take place.
Thank you very much. So we have some questions. If the audience has questions, please send them to our chat. But we already have a couple of questions. The first one is from Daniel Rachmanis, and his question is the following. Daniel Rachmanis is the president of Estee Lauder Latin America. Latin America has a long road to shorten the big gap to achieve gender parity. In the workforce and in society in general, something which is very near and dear to my heart, both in the public and private sector. As this must be seen from different angles, it requires a collective commitment. Where do you see areas of opportunities in both the public and private sector where they could work together to really make an impact on gender equality in Latin America?
Yeah. Well, I mean, the bad news is that gender equality is so pervasive in Latin America. The good news is that if you tackle it, you tap into income generation growth that comes by including women in the labor force and including women as entrepreneurs. It may very well be that those countries that, rather than slipping into more gender inequality, which is what the crisis currently is pressing towards, create more conditions for gender equality, that they will be the countries that come stronger on the other side of the COVID crisis. So what practically can be done? For governments to very explicitly focus on eliminating legal barriers for women to participate and creating conditions for female labor market participation. There are still big differences between men and women in accessing the labor market. Strive for equal pay for equal work, and as much as possible move towards gender-based budgeting. What is gender-based budgeting? It is in the public spending to put components that make it easier for women to participate in the economy. In some places, that may be an issue of having rural roads. or having access to running water. In other places, it may be a matter of putting legal requirements for private sector not to discriminate women in terms of looking after children, creating more conditions for childcare and making it affordable. By the way, we just took a measure at the fund to make childcare more affordable for that reason. And for society as a whole to recognize that we are making ourselves poorer by holding women back. My former institution, the World Bank, calculated in terms of wealth of the planet, what is the cost of women not participating fully? How much our wealth shrinks? And they came up with some $170 trillion, the world being poorer because of that. So I think for us at the fund, our mission on this is very clear. We are exposing the risks to increase gender inequality in this crisis. Women pushed out of the labor market first, women being more in contact-dependent industries, more in the informal economy, and also women now carrying more of the burden of work at home. And I think that the more the society has this conversation, the better. And one observation that many are making, you look at the world, countries run by women in this pandemic, they tend to do better. New Zealand or Germany. So women have that special quality of empathy, care for the well-being of others. Men also have it, but it looks like that women, especially in crisis, shine. I have a favorite saying, Eleanor Roosevelt. Women are like tea bags. We don't know how strong we are until you put us in hot water.
I think that's wonderful. And I think there's another issue associated with it, which is why at the beginning I said you're such a role model, because it's not just women entering the workforce. It's women getting to the top and becoming CEOs and leaders in organizations and getting equal pay for that, which is going to help, create more role models and more network and more opportunities. So, to me, this is one of the biggest opportunities that we have around the world, and particularly in Latin America. So thank you. So we have another question, and this one is on climate change, and it comes from Brian Winter, who's actually editor-in-chief of America's Quarterly, which we actually own, but it's editorially independent. And his question's around climate change, because one of the editions next year will be on climate change. Climate change is a major global challenge and a top priority of the incoming Biden administration, as you indicated. Is there a role for the IMF in helping Latin American countries develop their economies in a sustainable, in quotes, green way?
There is definitely a role for the IMF. Why? Because one, climate shocks for countries affected are macrocritical. They create balance of payment needs on a massive scale. That's what we are created to cushion against. Two, because the transition to low carbon climate resilient economy is a tremendous opportunity for growth and jobs, not to be missed by anyone. And three, because the IMF has the only mandate globally to keep a hand on the pulse of the world economy through our surveillance mandate. And that means to help countries think through their path for growth, employment, and improvements in which how we address climate risks and how we take opportunities of this transformation to the new climate economy absolutely paramount. We have done at the IMF recently a very important work on three big issues that we are going to cascade down in engagement with the membership. First, how do we factor in a successful, sound strategy for shifting to low carbon climate resilience? And there, what we concluded is that a combination of a massive green investment push, forward guidance on carbon price, and measures to make sure the transition is fair to people who are in the high carbon intensity economy. This combination can help countries over 15 years get 0.7% higher growth and can generate a surplus net infusion of jobs. Secondly, we look at the fiscal policies of countries and there what our advice is: eliminate harmful subsidies and make sure that you give your businesses and consumers a trajectory of how carbon price is going to go up, because it will. And then three, we are looking at the climate-related financial risks. How could the financial system be protected against climate shocks and these transitional risks? All of this means that for the IMF today, integrating climate, green growth, sustainability is so critical to do well that I count on people like you to keep asking us where we are, how much advancement you have made, how do you support your membership?
We'll definitely take on that task. We would be delighted. So we have another question, which is, I think, a really good question. It's from Angel Melguizo, who is with AT&T. Is the IMF envisioning a financial credit line to bridge the digital divide? Or is the IMF joining any of the regional efforts, IDB, CAF? The mobilization needed, around $100 billion US, looks unreachable given the fiscal situation of most countries in Latin America.
Right. Well, let me first say that the IMF in the crisis prioritized Latin America. In fact, 62% of what we have financed, and we have financed over 100 billion, went to Latin America because Latin America is so severely hit. We have supported 21 countries. The total in this short period of time since the crisis hit of financial support to Latin America is some close to $63.5 billion. Why I'm saying that? Because our view is that we have to be fast in coming through to support countries when they're faced with the crisis. But then next, we need to think about how we help countries to come out of this crisis by building the blocks for sustainable and inclusive growth. For us, what we are now discussing is how in our next round of financing, we can be a source of support for countries to do this transformation. In other words, create fiscal space so they can invest in taking the turn towards greener and digital and fairer economy. We don't have a dedicated instrument, but what we do have is linking sound policies with program support from the fund. And very clearly, this digital green transition is the sound policy direction we are determined, we are keen to support. We have lending capacity up to $1 trillion. Currently, we have provided just around 280 billion. So we have space for the next stage of supporting the membership.
Thank you very much. So there's another question, which is an interesting question from Claudio Santos from Brazil, from O Globo. And her question is, in order to face the economic effects of the pandemic, many countries across the region have incurred budget deficits. How are they going to deal with their fiscal problems post-pandemic?
Yeah, clearly leaning forward in the pandemic, keep the receipts, but spend has been a must. Without it, we would have seen massive bankruptcies, massive unemployment. That didn't happen. But even in an environment of very low interest rates, building higher debt and bigger deficits needs to be addressed in the medium term. What we're telling governments is put in place a credible medium-term budget consolidation plan. So people know that you are expanding your deficit now, but as the economy recovers, you have in place measures to balance the books, and that you're thinking about your taxation policies for the 21st century in the way that they are fair and they allow you to have this fiscal consolidation, credible, believable fiscal consolidation path.
With this, your team is telling us our time is up. And I want to thank you for this really interesting conversation. There are so many challenges, Madam Managing Director, in front of the hemisphere. And I think your leadership is going to be incredibly important because the future is really digital, it's green, it's not going backwards, but it's taking a crisis, as you said, and turning it into something which was better than before, and something which is more optimistic than before. So thank you again. I hope we can continue the conversation on so many different fronts, including regarding gender. We have a whole initiative of a Women's Hemisphere Network. And so thank you again, and good luck in your many endeavors.
Thank you. And on your gender initiative, count me in.
Thank you. And please, be healthy, be safe. A very happy holidays to you and your family.
To everybody, to you and everybody on this call. Thank you.
Thank you, everyone, for joining us. Everyone, be safe and happy holidays. Thank you so much.